It's Wednesday, February 1st, 2023. A lot to talk about today. Before we do, please make sure to like this video, share all of my videos, and make sure you support the channel by subscribing. Hit that bell notification down below, hit that subscription button down below, and support the channel. But without further ado, let's get right into it. Dow Jones up 6 points today, NASDAQ up 231. Gold, silver, Bitcoin, everything just taking off. And we listened to the Fed Chairman Jerome Powell today as he came out, did raise the Fed's fund rate 25 basis points as we anticipated. There was a possibility he would go higher, but he really doesn't have the guts, so he went 25 basis points. Now, I watched his interview, I watched his speech. It was very hawkish and dovish at the same time. The market seemed to find any bit of positivity it could, any type of hope it could. And we saw the market down. At one point, the Dow Jones was down 502 points, rallied back up 6 points at close. But I want to share a few articles with you today, and I want to talk about the Jerome Powell speech and some of the things he had to say. And I would love to get your opinion of this and your input, so please comment down below. But I want to start with this first article today. Private payroll growth slowed to 106,000 in January as weather hit hiring, ADP says. I think it was more than weather. I think it's actually the economy is what hit payroll growth. Let me know what you think. But this is what's very concerning here. And it's that most of the growth was in leisure and hospitality. What a surprise, what a shock, right? Bars, restaurants, and hotels added 95,000 positions. Remember, there was a total of 106,000 jobs added in January. 95,000 of those jobs were in leisure and hospitalities. Bars, restaurants, hotels, jobs of that nature. And remember this also, very important, most of these jobs were part-time. Now, getting back to Jerome Powell today and his speech and some of the things he had to say, just amazing. As he's speaking, the Dow Jones was down 502 points, comes back, the close today up 6 points. NASDAQ, everything was down. NASDAQ was down, gold, silver down, Bitcoin down, everything, and it all turned around. But he said that the Fed is strongly committed to our 2% goal. We have more work to do. We will continue to reduce the size of our balance sheet. He says activity in housing is weakening. He said full efforts yet to be felt. And this is what stood out to me is he said, I don't see us cutting rates this year, but the market does. A lot of people coming out today and the market believing this, that they are going to cut, that they are going to ease up. And yet there was no talk of that whatsoever. He says we will need substantially more evidence to see that inflation is easing. He said inflation remains high. Job gains have been robust. But look at where the job gains are. Leisure and hospitalities, people getting part-time jobs at bars, restaurants, and hotels. He said we will stay the course until the job is done. So a lot of this is very, very hawkish, yet the markets are ignoring this. They don't believe him. And the markets soared today, or at least in the at least for the Dow, it was saved because it was down over 500 points and was able to get in positive territory and close up 6. But NASDAQ had a very, very nice day as it was down and closed up over 200 points. He went on to say we will need restrictive stance for some time. As he also said, we see no recession. I mean, think about that. That Jerome Powell says he sees no recession, but that they will need to they will need to have a restrictive stance for some time, meaning they're going to have to keep rates up for some time. That when they get to a point, they're going to leave it there for a while to make sure that they stamp out inflation. And yet they don't see a recession. That's concerning when you think about. You know we're in a recession right now. I know we're in a recession right now. And we have the Fed Chairman Jerome Powell telling you and I that he doesn't even see a recession in the future. That's concerning. We continue to get a strong labor market. Again, look at where the jobs are. This is what he said. We continue to get a strong labor market. Everybody's working for hotels, bars, and restaurants. And while all this is going on, and while we got another 25 basis point rate hike, and while Jerome Powell is talking hawkish here, he didn't say anything about the government continuing to spend trillions upon trillions of dollars and the Fed monetizing this debt. So we've raised rates higher than any time in history, yet the consumer has not stopped spending. They're just increasing debt because they're spending with money they don't have. They're using credit cards, and people are getting themselves into a whirlwind of trouble here. He never said no to a pause today, and all I see today is just more hope. These markets hoping that the Fed will pause, hoping that the Fed will pivot. Now, let's see what happens tomorrow as the markets have some time to digest all of this. And again, do you really even care what the markets do? Because to me, all I see is more bad news for the U.S. economy and the consumer and the U.S. worker. And I think it's going to be a very, very rough year for many people. But some of the positives, he said that the labor market is strong, global market improving, more spending going into construction. And he's optimistic that we will see more positive growth this year. So shifting gears here and turning the page, this was on Fox Business. U.S. housing market seeing meaningful damage that's not normal. CEO of investment firm warns. So as Jerome Powell is somewhat being hawkish, it's all talk, but he's really not taking real action. If he really wanted to do something, he would be raising interest rates much higher than 25 basis points. He would be straight with the American public. He would be demanding that the government slows spending, and none of that is taking place right now. But Bill Pulte from Pulte Capital, the CEO, Pulte Homes, he said the U.S. housing market is in for a rough year. 2023 is going to be slow. I think we're going to have a very tough road to hoe. He stressed orders are down 40% year over year, and he said that is not normal. He said a lot of builders are using cash to pay down interest expense of consumers. And that means at some point that is going to start really cutting in to their margins, into their profit margins. And how long can they do that? How long can these big builders be paying down interest expenses of their consumers before it hits their bottom line? Not much longer. So I thought that was pretty interesting, and I thought that that was a pretty honest interview on Fox Business with Bill Pulte. So I think that's being honest, and I think that that's a big indicator of what is going to continue to take place in 2023 as existing home sales, new home sales are going to really suffer. FedEx is laying off 10% of its officers and directors amid cooling demand. Another indicator of this economy cooling down. We see what's happening in existing home sales, what's happening in new home sales, what's happening with FedEx. How about Rivian to lay off 6% of its workforce as EV price war concerns grow? Their stock is down 69% from a year ago. Think about some of the people buying some of these EVs. Will these companies even exist 2, 3, or 5 years from now? And if you spend $120,000, $150,000 on one of these cars, and in 3 years the company's gone, what do you do? Here's another one, a shocking 28% of Canadian women are completely out of money. Major changes are coming for people. And I don't usually talk about what's happening in Europe or Canada because I don't really care. I care about what's happening right here. But this was shocking. 62% of women in Canada worry that they might not be able to put gas in their car. And I bring up Canada because there are so many Canadians that are out here in the desert. Not as many as there used to be, that's for sure. But we do have a decent amount of Canadians that have homes here, second homes here, who come down for 30, 60, 90. Some of them come down for 6 months. And so we do have a lot of Canadians out here. And so this was interesting. And if I run into any of them, I'm going to ask them about this. Another one from Bloomberg. Rolex reseller Chrono 24 cuts jobs as pre-owned watch prices fall. This another barometer of what's happening. Now that all the crypto money is gone, now that all the stimulus and all the benefit money is gone, people aren't out buying 15, 20, 50, or $100,000 watches like they once did. The secondary watch market company, Chrono 24, they have reduced their headcount in New York, Hong Kong, and Germany, cutting 65 jobs. That's not huge, but that's 13% of their workforce. And again, it is another indicator that the money that was flowing a year or two ago is not out here. It's not flowing like it once did. It's vaporizing. All that free artificial money, all those injections, the $7 trillion over 30 months, it's all gone now. The SubDow 50 index, which tracks prices of the top 50 most traded watches, is down over 33%. And so how many people went out, got into the FOMO last year and the year before that, buy this watch for 20,000 and next year it's going to be 50,000. Buy this watch for 50, next year it's going to be 150,000. This is the kind of craziness that was going on, that was playing out, and now it's not happening. And if you think that 33% is a lot, wait till you see where this is going to be in the next 6 months. But again, it's another indicator of just how crazy things were, and now how things are settling down, things are cooling down in the economy. And when you don't have all of this free money injected into economy, you don't have this kind of craziness going on. I've talked to some of these watch dealers in the past, and I have to say they're as bad as real estate agents. Still saying that this is the bottom. I mean, just months ago, they were saying this is the bottom for the secondary watch market, the gray watch market. This is the bottom. And here we are. It continues to fall, and it's going to continue to fall. And so, if you want to know what's happening in the watch market, if you want to know what's happening in the real estate market, don't talk to a real estate agent. They're not going to tell you what's happening. Don't talk to a secondary watch dealer. They're not going to tell you what's really happening. They have to keep the hope alive, right? That's how they make money, by hoping that you'll buy something and believe. They all want to believe that it's going to double in price next year, that this is all going to come back. This is never coming back like it was. I can tell you that, because the $7 trillion is now vaporized. There is no more free money. There is no more stimulus. The party is over, and now the hangover is coming, ladies and gentlemen. And the days of people just, who were working at a hotel, working in a bar, working at a restaurant at one point, and then making hundreds of thousands of dollars in crypto, going out and buying $50,000 and $100,000 watches and Lamborghinis, this now is over. So I'm going to wrap it up right there today. Just wanted to share this news with you. Please, I would love to know your thoughts. Comment down below on what you feel happened today. Was the Fed hawkish? Was it dovish? I think it was in between. They're so afraid to rattle the markets. And, really when you look at it, the Fed is really, I believe, looking out more for the markets than it is now for the average worker, average citizen of the United States. Their job now is to look out at these markets. When you have a Fed telling you that they don't even see a recession when we're in a recession, that's a big problem. And Jerome Powell can talk as hawkish as he wants, but he's not walking the walk, that's for sure. He is backing none of this up by any type of action, because I truly believe, and I could be completely wrong here, but I think the Fed is buying into these markets. I believe they're buying bonds. I believe that they're using a balance sheet that we don't see, that it continues to expand. I believe they're still printing money, yet they are raising rates over here while expanding some private balance sheet over here. And this is going to cause a big problem here. You can't play both ends here, ladies and gentlemen, without things really blowing up. They're so afraid to rattle these markets. They're so afraid of letting these markets go. But I'll tell you what, at the end of the day, they're not going to have a choice, because the economy is going to drag it all down, because the economy is crashing right now. The housing market is holding on by a thread. When that goes, it's going to pull everything down. And at the end of the day, who cares what the stock market does? Is it helping you at the grocery store? Is it helping you at the gas pump? Is it helping you find a job? Oh, but they'll tell you how many jobs there are, how great the job market is. But what they don't want to tell you is it's all in leisure and hospitality. It's all part-time, low-wage jobs that have no opportunity to go up the ladder. Nothing. So as people get deeper and deeper into debt, they can hope that the Fed makes this all go away. They can hope that the markets go up. And if the markets go up, what's it going to do for the average person in America? They're going to lose a job. The economy is going to pay a price for these markets. The economy will continue to be sacrificed for these markets. Remember that. So we can all clap and go nuts that the market goes up, but remember how many people are going to lose their job for it. They are going to cut the fat. It's all about those profit margins. They don't care if you lose your job. They don't care. But at some point, it's going to go full circle, and they're going to care when the American people cannot afford to buy those products and goods from those companies, when they can't buy the houses, when they can't buy the services. It's going to be a big problem. So I'm going to leave it there. Hey, quiet. I'm going to leave it there today. God bless all of you. I look forward to speaking with all of you very, very soon. I've got Gigi and Nugget out here going crazy. It's a beautiful day, about 72, 74 degrees, 80 degrees coming this weekend. I'll say one thing, California is a disaster, but at least we still have decent weather, but I still can't wait to get out of here. Talk to all of you very, very soon.